basically why I decided to take this trade was because multiple signals were firing off. That sizing could have been pushed, I think, comfortably 2 times what I did because the underlying stocks were so liquid. There's still so much I want to achieve and do. Rewind 3 to 6 months ago and I was actually, really quite stressed and was one of the trickiest times in my career.
Hello, and welcome to the Trader's Journey for Investors Underground. In this episode, I get to sit down and speak with Austin Mitchum. Austin is a professional day trader based in Australia with over a decade of experience at a professional level. He combines deep technical analysis with extensive journaling, much of which he shares on his Substack. In this episode, we'll discuss Austin's trading journey from his internship at Morgan Stanley to having to move back home with his parents, finding success, and so much more. It's an honor for me to get to introduce Austin Mitchum. Hello, Austin. Thank you for being here and welcome to the show.
Thanks very much, man. I appreciate it. And I guess thank you for all that you've done. And you've been, I've certainly enjoyed your content over the years. So it's a privilege to be here. Thank you.
Yeah, and thank you. I have watched and I've known of you at least for, probably about 6 or 7 years now. And so it's really an honor for me to get to speak to you like this. So I know a little bit about your trading journey so far, but for the audience or those who might not know about you, I'd love if we could just start there. So my first question is, how did you get interested and hear about even the world of stock trading?
Yeah, I mean, I didn't actually know what I wanted to do at all when I was at university. I was 21 years old and sort of needed to get serious with my life. I was always quite a competitive person. I played a lot of sport, but didn't quite make the next leg in a sporting career. So I needed to get serious. I was studying history at uni, and I remember one holiday as I was at home picking up some books, and I read Market Wizards from my parents' bookshelf. And that made a huge impression on me, the Jack Schwager series. And yeah, as I was reading, that kind of really resonated with me. It sort of suited a lot of my character traits. And I basically then started applying for internships. I was in the UK at the time, so I started applying for internships at different investment banks. And I was fortunate enough to get an internship at Morgan Stanley in the trading desk. So from there, it sort of very much grew. I started self-teaching myself, reading the Financial Times, reading every book I could get my hands on, started dabbling PA. That's sort of the beginning of my journey. I had zero interest until basically I was at university, and that's when it all began.
And so what was that experience like for you at Morgan? Were you just learning as much as you can, like a sponge? How much of, what you were doing then was similar to what you eventually would go on and do in the prop world? What did that all look like?
Yeah, I mean, what I'm doing now looks nothing like what I was learnt or taught in those days, but it was a highly structured sort of internship program where you got to spend time at the different desks, the trading desk, the sales desk. You got exposure to cash equities, options, all different types of products. So it was great to sort of start understanding the market structure, understanding different products. Also just great for networking and meeting the different people in different fields. But I was so green, right? So, what I'm doing now, I'm not using the same tools I was back then, basically. But I was very fortunate, to get that kind of role. You get a lot of exposure very quickly. You get to take on a lot of risk very quickly. So if I just step back, I was an intern, and then luckily I was accepted to the actual graduate program. So I came back the year and was given a full-time role on the trading desk. So yeah, when I say you were given a lot of risk, that's when I was on the graduate level. So yeah, it was a real eye-opener. I started 2006. So basically just as the market started going crazy. There was about 1 or 2 years of the proper bull market before the whole thing collapsed and we entered the GFC. So I saw literally like the euphoria, and then I also saw the bust. And I ended up losing my job, 2009, right in the height of the crisis, basically. So,
what were some of the early lessons that you picked up from the market? And were you trading, different types of markets? Were you trading U.S. market, European markets? What was that type of, instruments that you were trading at the time?
yeah, so my role back then sort of can be broken down into sort of three different things. The first thing you do is you're very simply just working client orders. So an order will come in from an institution and you're asked to go buy or sell that stock with different pricing instructions. And that's just a really great way to learn because you're getting a feel for these different stocks. You're getting a feel for how they trade. The second role is market making. So client would call up and they'd want to buy XYZ stock, and you had to make them a price. Now, obviously, if they wanted to buy, you're essentially short selling the stock to them to facilitate that deal. So you then make a price, they say yes or no, and you're then responsible for getting out of that risk. So I'm now short those shares, and it's up to me to manage them how I want. But on the whole, when a client rings you up to buy a stock, you probably don't want to stay short that stock for too long. So it was very much a kind of exercise of making clients a price and trying to get out of that risk as quick as you could, and then seeing if that institution wanted to go again. And then the third role was prop trading. So the banks at that time allowed traders to bet, the bank's money. And that's obviously the area that I was getting more and more interested in, but I didn't know what I was doing. But at the time, I actually had some success, and I didn't really internalize why. And I know now why some of my prop trading worked, and it's because these institutions were highly specialized. They broke you down into what's called pods. So basically, you would trade one sector. So for instance, say you're trading the consumer stocks. So you'd have 3 traders trading the consumer stocks. You'd be sitting next to a specialist salesperson who just sold consumer stocks. And then on your left, you'd also have, there was Chinese walls, but you could also have the research department basically on tap as well, via phone calls or whatever. So you had this really intricate knowledge of that sector and all these specialists around you. And you also had client flow coming in. So you're seeing the client flow, you're sitting next to the specialists in the field. So you had this amazing edge and niche around you. And that ultimately was what I think defined my trading at that time, just leaning on these different variables. And at the time, I didn't really put my finger on it, but that's now why I'm such a big advocate of like team trading, pod trading, expanding your network, because it's all these different inputs that are going to basically help you to identify the very best trades. So that's a little bit about what I was doing at that time. So client orders, market making, and then prop trading. I was based in London, so I was just trading European stocks. No US stocks. So basically the London office was responsible for the whole European markets, basically.
Okay, great. And I think it's interesting that you bring up this importance of having a pod or a group, team trading, because that's something that I've heard, resonate with other successful traders as well. And I definitely wanted to touch on that concept and also networking a little bit later on, if that's okay.
Definitely. I think it's probably one of the most important things people to grapple with and to make a priority.
And so, Austin, what came next? How long were you trading in that capacity? And then, what was the next big step for you in your evolution, your trading career?
Yeah, the next step for me was actually quite a tricky time in my life. I lost my job in London. My parents are based in Sydney. It was the height of the GFC. There was no way I was going to get another job. So that was my chance to come and move to Sydney and see my parents and spend time with my parents. But there were no jobs, right? So I basically decided to, that's what I wanted to do, trade my own money. And so I literally set up in my parents' bedroom. And for about 2, 3 years, I was just awash. I would make a bit, lose a bit, make a bit. But through time, 2, 3 years, I, was just burning away living expenses, costs, everything else. So just being a flat trader, I was actually negative just through the course of time of my expenses. And what I was doing was technical trading. And what I wasn't doing was leaning on all the things I had at Morgan Stanley that I wasn't conscious of, like the team trading, the different variables, the specialists and all the different fields. I was just literally pulling up charts and thinking I could trade technically, and it just didn't work for me. So I basically was forced to put it on ice, which was a bit of an ego hit, but it was the reality. I then started looking for jobs and was fortunate enough to work for a CFD provider, just writing trading content, writing trade ideas, speaking to clients, talking about potential trade ideas and the like. And I was very fortunate through time that one of my readers, he really liked my content. He really liked my reports. And he ran a sort of a private office / hedge fund in Sydney. And he was looking for basically a technical assistant, a desk assistant, to help set up some infrastructure for him technically. So he was basically a fundamental type trader, and he wanted someone to help him with, say, breakout patterns. He wanted someone to help him sort of better formulate what he was doing, and have a better process, basically. So I joined Blue Lake Partners as a trading assistant. Spent maybe 2 years basically building out some infrastructure for him. And in time, I was slowly allowed my own trading book. And that's when I sort of my experience sort of started to blossom. And again, I was joining those dots of all the different variables and all the different inputs you need to be actual trade successfully. After about 2 years, I was given a full-time book. And that first year went really well. So then they actually made me a full-time trader. Yeah, and that was around 2016, 2017. So it was about a 5-year journey from sort of, feeling really low to suddenly being able to get this great opportunity once again to trade with this institution.
That's actually really inspiring, because you stayed with trading to a lesser degree, but you continue to hone your skills. Is that, one of the things that you think was critical to your ability to continue trading in the long run, is just that tenacious, resilience to stay within the markets and finance and continue to brush up and learn? I mean, can you imagine what your life would be like had you not done that and you moved completely different career path?
Yeah, I mean, that's such a good question. I definitely don't think what I did was necessarily good advice. I think there's probably, I could have deeper reflected and made better decisions along the way. But my character trait is I'm just a very competitive person, and it didn't sit with me that I couldn't work this out and get it right. I'd experienced some success, and so I knew it was possible. I just kind of had to work it out again. And yeah, I am a competitive person. I'm pretty resilient, and those are the character traits that you're gonna have to need in trading, right? I think people underestimate how much you're going to be knocked about and how much this journey isn't exponential, even linear, right? You're going to get knocked about a lot. So I think those experiences were very formative for me, and to date, I think that's why I can continue to sort of grind away when it gets tough, because it gets tough the whole time. And yeah, I think you raise a good point there. I also think that I just hadn't figured it out. I hadn't found an edge. And for most people, that's the hardest bit. You know, you're sitting there and you're seeing Twitter and you're seeing all this content and you think, oh, that looks easy. The hard work is actually just trying to work out the edge, trying to work out something that works for you, that resonates with you, and that you can clearly identify and that you can clearly label, and then just doing that over and over again. And yeah, the turning point for me was, one, being back in institution, and then two, this concept of stocks in play, which I was learning from, Mike Bellafiore, reading his book, and a local trader I met in Australia. And that was the sort of aha moment, just bring it all together, focusing on stocks in play. And that was the foundation for my new edge. Rather than leaning on technical so much, it was focusing more on catalyst-driven trading and then wrapping that in variables, basically.
Okay, great. Yeah, and I definitely wanted to go down that path. And I know you mentioned Mike Bellafiore, who is amazing. We're both mutual, pals with Mike, and he's extremely inspirational.
He's the best.
Between his books and all the content that he puts out. So I definitely wanted to ask about, the edge, when you finding your edge, including, stocks in play. So can you talk a little bit about, where you started to find success and when you knew and identified your edge? How did you even find your edge? At what point did you realize that you had something in a particular style or strategy?
The starting point was stocks in play resonated with me. Catalyst-driven trading resonated with me. Why? Because you can literally focus the whole time on stocks that are moving or should be moving based on a catalyst, right? And so much time with technical trading is just spent in doing nothing, right? Whereas with stocks in play, you can literally identify stocks real time with catalysts that are market moving, that are potentially company changing. So that was the starting point, wrapping everything I can do with catalysts. And the second part of finding this edge was, I was in a chat room, and a close friend of mine, Bryce Edwards, was, steps above me as a trader. And he was like a slave to the tape. He was a great tape reader. And that was something I'd never really fully spent a lot of time on. And I then basically flipped my style, where I was never really looking at charts anymore. And instead, all I was doing was reading that tape, using that tape and fitting that as the central point of everything I was doing. So it was sort of the catalyst and then the tape. And that's when everything sort of started to really come together for me. And from that, basically, I started building strategies wrapped around those two important variables. So, it might be, say, a morning drive, a mean reversion system, a breaking news system, an overnight momentum system. I probably have 5 or 6 different playbooks now, but all of them really are based around, that catalyst. And on the whole, what I'm always trying to do is structure those trades with the trend. Obviously mean reversion seems like it's counter trend, but really what you're doing is you're waiting for this new trend to emerge. But that's really what I'm trying to do within those different playbooks. Being a slave to the trend, being a slave to the tape, and fitting all these different structures wrapped around a catalyst as to why something should move right here, right now.
If you're looking for ways to take your trading to the next level, Investors Underground might be able to help. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms, where you'll find a vibrant community of focused traders who share their trade ideas in real time each day. Members also have access to the morning broadcast, where the IU moderators share their trade ideas for the day ahead during the pre-market session. Members have access to the midday study sessions with Stan, the midweek study sessions with Sam, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of The Trader's Journey can access exclusive membership deals available at investorsunderground.com/journey. And now, back to our episode with Austin Mitchum. How long did it take for you to get proficient, or even beyond proficient, at reading tape? because, I've talked to some people, and most recently in Vegas, I had this conversation with someone about how they want to get better at reading tape. And it's something that I hear a lot from people, especially developing traders. So can you talk a little bit about, what that process was like for you, getting comfortable reading
Yeah.
tape and
Yeah. I don't know enough about the US market when it comes to reading tape. Um, I've been privy to some of the content that Lance has produced. I've been reading his emails for years. And of course it was important, but I don't think it was essential input. Whereas in Australia, our market, the tape, I think, is a lot cleaner. Certainly in smaller to mid-cap denominations, not in your large cap denominations. And this is a really simple answer, but it's the truth. The best way to learn about tape is just to sit and watch and watch. I would replay after hours, different structures, different openings, different moments in the day. And I was just constantly internalizing these patterns. And I think, if I had any strengths with trading, it is pattern recognition. That is something that I think resonates with me. And the tape is the central part of that. So really, in answer to your question, it comes from literally spending time watching. I didn't record my screens. I think that probably is a good best practice, but I was just very simply replaying functions. When I was doing my write-ups and my trade reviews, I'd always be snipping what the book looked like at that time, where the big flow is. And I think reading tape, as I said, keep it simple, but think about what is actually happening. Really what you want to see is something that's obvious. You want to see some kind of transaction where clearly one side is more weighted to the other. You want to see, if you're, for instance, breakout trading or momentum trading, you want to see volume into that offer as confirmation that, this is a real move. And I'm not just talking about a little bit of volume, I'm talking about meaningful volume. You want to identify patterns, like when that offer lifts and it retests, is there someone there supporting the stock? And the tape reading isn't like there's always these obvious signals. We're talking more about, 2, 3, or 4 times in the story, something becomes really obvious and you're sort of trying to go along with that story. It's not like it's always just screaming. And certain trades, you're looking for certain things. With a morning drive, for instance, you want to see this continuous sort of algo flow, real flow, and identify, are pull-ins getting bought? Is there meaningful volume into the offers? If, for instance, say you're trading a breaking news type trade, obviously what you want to see is a fast, exponential move, quick action, wide spreads to tell you that, right, this breaking news idea is correct. How you exit a trade as well is going to be based a lot around the tape. You can see strength, and then suddenly it's like it's just getting too fast, or it's getting too extended, or a level will lift and there's nothing left, and then that's your reason maybe to exit. So those are the different parts of the puzzle when it comes to tape reading. And in Australia, I think there are moments when it is particularly clear. And if I could, make a guess as to why that's the case, I think we do not have the high frequency firms like you do. Our market is more driven by institutions. We also obviously have a lot of, traders as well, but predominantly it's long only institutions, and their footprints are quite straightforward. The algos they're using are more sort of volume seeking, participation type algos. We don't have multiple exchanges, so people are arbing the different exchanges. So I think that's why in Australia, tape reading is so powerful.
Okay, great. Thank you so much. And I just wanted to, clarify for anybody who didn't catch this. You're trading exclusively the Australian Stock Exchange. Is that accurate?
That's right. Yeah, that's solely what I focus on. I recently have been thinking more about trying to build up a US playbook. That's going to take a lot of time. I spent a night with an Australian trader who's now trying to move over to America, and I spent the night there just frazzled. So I fully realize it's going to take a lot of time to build that out. And look, I've built my edge here, my family's here, my lifestyle's here. I've wrapped everything, around what I do performance-wise into my market. And yeah, so I'm focusing exclusively here. There will be ability to do other markets, but the reality is, I think to be good at anything, you just have to own one space.
Yeah, and I was going to, underline that point, which is you understand what works for you, where you've built edge, where you have success, and you're continuing that success. Not so interested in a rush is more accurate to put it. In going and trading the U.S. markets, you're doing what works for you, for your lifestyle. And that's what you're sticking with, and I think that makes a lot of sense.
Yeah, I think I am a big believer of obviously in self-improvement and growth. I can't ignore the opportunity set of America, but I'm also not naive to think that I can just go in there and make money. So any playbook I build out or any strategy I build out for that market is going to take time, and it's going to take a lot of sacrifices. And at this phase in my life, I can't quite make the sacrifices needed to get there. So it's going to be a stage process to get there.
Yeah, and about your playbook, I just wanted to ask Austin, how would you define your playbook? Are you more of a long trader? Do you short about 50-50? Are you still exclusively equities? Are you trading options at all? What does that look like? Sort of your instrument of choice to trade, and what is that all?
Yep. I just trade cash equities. We don't have a liquid options market in Australia. I steer clear of futures trading. I'm not a good futures trader. I have tried to trade futures with no success. In a breaking news type scenario, I might look to trade some futures. Again, I haven't had any success with that, but it's a stepping stone. So I am literally just Australian cash equities, basically product.
Okay, great. And one of the things that has always stood out to me about your trading style is your detailed analysis and reviews. For lack of a better term, it's your daily report card. I've seen just some phenomenal write-ups. And so I kind of wanted to ask, is there one particular trade or setup that you think is really representative of your trading style that you'd be willing to share with the audience?
It's a really difficult question because I would say that it's evolved. And I think most traders who have been in the market for a long time, their setups have kind of evolved. To begin with, I was very much a morning drive, catalyst-driven trader. I still use that strategy. I still think bang for buck, that's the easiest money out there. However, it comes with pitfalls, which is the nature of gaps, the nature of traps, liquidity. It's quite hard to push meaningful size in those scenarios. And I've also found recently that the market in Australia has become a lot more efficient, reflecting that catalyst early in the nature of a gap. So, really, the more and more the stock gaps, the more and more really your risk rewards obviously changed, your EVs changed. And I've found more and more that in recent years, that's been the case in Australia. So that's a sort of style of trading that I used to use a lot of, and now I'm finding less success with it. I would say that my most powerful trades now are sort of breaking news type trades, highly rare, very, very rare. So, maybe once a month they might fire. But I've built a lot of great infrastructure there to be able to capitalize on that should it go. I'm expanding more into trying to trade sort of unique, I call them sort of maybe scenarios. And what I mean by that is there's some kind of news event which is going to take multi-days to play out. So trying to frame a trade wrapped around these different variables and maybe position trade it more or swing trade it more, rather than, my classic sort of intraday type in and out within the day. And one area of growth that I've really worked on is more of a sort of quantitative type overnight system. It's quite simple in theory, but again, you need a lot of infrastructure and access to be able to pull the strategy off, really. And in itself, it's not particularly complicated. But really, what I'm trying to do is position in strong stocks and strong stocks based off earnings revisions. And that's a strategy that I've spent a lot more time on. It's a strategy that needs more time, more exposure in the market, rather than some of my shorter term type trading strategies.
Yeah. Is there one particular trade that comes to mind? Something that's like breaking news that took a couple days or a few days to play out, that you'd be willing to talk about in some depth?
Yeah, sure. I mean, I think the most obvious example that will resonate with the audience is the recent China stimulus event. I know this has been at the forefront for a lot of people's radars. And for once in Australia, we were actually at the forefront of it all. Our time zone was right here, right on time. And so this was, I think, a great trade example we could talk through. I've shared you an Evernote that I've written up that goes into some specifics of that trade. And this isn't a trade that actually I traded particularly well. And I think a big part of what I'm always trying to do when I'm doing write-ups is to literally examine, what I've missed, what I can do better, and then building stuff out for next time. So this trade really sort of encaptured two things. There was a breaking component to it, a breaking news component to it. And then there was a second component, which was trying to structure what this might mean for global markets overnight. And yeah, so I've shared you the Evernote. There's a lot here, so it might get a bit, there's too much to go through. But in essence, in the build up to this trade, we've been hearing about, the China stimulus button has been talked about multiple times, and it has never really eventuated in terms to a meaningful market move. The China market has continued to trend lower, but this particular event caught the market's attention because it seemed that the central authorities, were now getting very real about, the economic decline, the market's decline. And so what we had here was the PBOC was holding a special briefing, which was scheduled for 11 a.m. our time in Australia, and it was very well flagged. So you could kind of game plan this quite well. The stimulus that they came out with was a mixture of sort of, monetary policy cuts. So the triple R, they cut by 50 basis points. The reverse repos, they also cut. There was one particular line which I think really caught the market's attention, where China came out and said they were going to allow funds and brokers to tap funding to buy stocks, and they were considering setting up a stock stabilization fund. And this seemed like quite a shift from the central bank policy, where they really now were just going to step into the markets. And it followed on the back of the US Fed recently cutting, European central banks have been cutting. So when all these central banks are in line, I think it's really time to heed that signal and participate. So what was great is in Australia, we were basically the first global market, liquid resources market, I should say, to be able to participate. And what happened was iron ore futures spiked, maybe 2%. And obviously, our underlying resources stock spiked with that. And so my initial trade was very simply that breaking news type trade. The announcement seemed to be slightly bigger and better than market expectations. So I bought a basket of resources stocks. However, what quickly happened is the iron ore futures drifted. They pretty much drifted all the way back to where they'd come from. And some of the resources stocks I played, such as Fortescue, also drifted, and that's just not what you want to see at all in any kind of breaking news trade. You know, your best trades are going to go from the start, and they're never going to look back, and that just wasn't the case here. The spike lasted maybe 5 minutes, and they started drifting back. And so for me, it sort of seemed like, well, once again, there's not enough ammo here. There's another sell the news event. But so I was basically forced to stop out some of those, not some of them, all those sort of breaking news type plays. And I was on the sidelines, but as sort of the afternoon evolved, the iron ore futures started to recover again. The China market started to recover again. And so basically come like 3 o'clock, everything was back into its highs and then actually starting to break its highs. Our underlying resources stocks had gone from spike, consolidation, back into highs and now trending. You know, BHP was up 3%. You know, some of the other resources are up 5 to 6%. And the biggest part of this trade was the daily structures. So we've had a big downtrend. There's been a lot of shorts that have come into these resources stocks. It was a prime spot for a real meaningful short squeeze type event. Lance will talk a lot about, you know, your daily chart and intra-chart must align. And what that really means is, you know, really what you want is you want a type of structure where your EV is exponential or significant, I should say. So I don't want to be joining breakouts in extended stocks on the upside, right? When you're daily intraline, what I really want is I want the daily chart to be in a position where I have a really good risk reward, and then the underlying intraday chart starts to confirm that bigger picture context. And that's what we had here. We had downtrend, new trend change, intraday charts were all breaking highs. So it ticked those multiple boxes, and you could structure the trade so that your risk was actually quite small because really your stop up was below, you know, sort of the breakout of the day. So as I came into the close, I started to think about putting on a basket of resources stocks. And this is not a playbook at all. And we talk a lot about building playbooks. And this is the hardest thing for a discretionary trader because you have these automated systems, you know, back-tested systems. And here was one where it's complete discretion. It's like, I think this is going to go up tonight because of all this news event, and I think the US market's going to run with it. Can I in any way systemize that and prove that out? No, I can't. And that's the hardest thing to grapple with. So I did put on this basket. I did structure it knowing my risk back below the lows of the day. Unfortunately, that move did continue overnight. Unfortunately, we did see a gap of around 2-3% in a lot of these underlying stocks the next day. And so my exit was quite simple. It was just VWAPing out or selling out with volume into that gap the next day, taking that early strength and then reassessing basically. So there's a lot of content in there, a lot of charts in there, which I think would better demonstrate some of those ideas. But that sort of, I think, tries to break down the two different trades, the breaking news aspect and then more this sort of like overnight type structured trade.
Thank you so much. I think that's an incredible example. One question I have is about risk, especially because you had mentioned there is, you know, sort of a discretionary component to this where you were sort of, you know, outside of your playbook a little bit. So, you know, what were you thinking in terms of, you know, risk management? Was there any sort of a hedge or anything like that that you were using to sort of, reduce the possibility of risk in the, the longer term?
It's such a good question, because coming into that event, I basically was making no money and losing money from these overnight trades. Traditionally, my P&L had been weighted sort of 50-50 to overnight strategies intraday. But in the last maybe 2 years, maybe a year and a half, my overnight P&L has just disintegrated. We're seeing less and less follow through on ideas. So that was weighing on my mind a lot. I was very conscious of, Austin, you just haven't been making any money in these things. So, am I falling into the same traps, the same pitfalls? And basically why I decided to take this trade was because multiple signals were firing off. We had, as I said before, that the China market was confirming, the S&P was confirming, our resources were confirming, the short base was so high, the daily structures were so good. So this wasn't just your average overnight trade. This, to me, ticked a lot more boxes. So really what I was doing in terms of my sizing is I allocated a strategy stop. And I think that's quite important, because if this is unique, you kind of want a dollar risk number that's got to be bigger than your average trade. So say you might risk 2-3 grand in a morning drive or whatever it is. If this is a unique one-off trade, then your stop has to be multiples of that, because you're only going to get this chance once every 3 months, So I allocated a dollar strategy stop that was basically maybe 2 times my intraday stop out. And in terms of how to structure it, it's tricky, because in your head you're saying, well, I'll just stop out if they gap down the next day to back to where I bought them from. But the reality is, if this was wrong, it was probably going to gap more than my stop. And those are the things that you can't ever fully grapple with in the moment. And I've struggled with this multiple times in my career, and that's why I think for a lot of people, they sort of underestimate the randomness of overnights. And when it's working, it feels great. But once you take a few hits, it really is just so painful. You lose so much control, or so much you can control, the more your time frame widens. There's more and more randomness that comes in. But anyway, as I was saying, in this particular trade, I sort of set a strategy stop. I had a basket of 4 or 5 names, and I very much just structured my sizing based off, right, if they go back to, say, maybe 1.5 ATR move, or where they broke from yesterday, that's where I'll stop, and that's how much it's going to cost me. So risking a certain dollar amount per name. So that's what I did in that particular scenario. And then it worked. And the tendency then is like, man, I could have gone way bigger. I could have gone way bigger, because this was so unique and it was so rare and all the rest of it. But if you just step back and listen to everything I said, it's like, I haven't been making any money from this stuff. I can't quantify this stuff. There's so much randomness that goes into overnight moves. The stock's already up 3-4%. So all you can say in the aftermath is, with no hindsight, is, why did I do what I did? Was my decision making correct in that moment? And what have I learned from that trade so that I can go and do it better next time? Does that make sense?
Absolutely. And
yeah,
one of the things I think is really unique about how you do your reviews is that you always have a section about what I could have done better, which I think is really important. Even though this trade worked out for you, you're still looking for ways to improve. And so, that's definitely one of the things I wanted to ask, which is, how did you improve? What were your lessons from this trade, not just in terms of, you made money on it, but takeaways for you, things to work on, growth, sort of mindset, walking away from this trade.
In this example, the biggest lesson for me was thinking more and more about uniqueness, right? You're thinking more and more about uniqueness. And some of your guests, obviously, they have highlight reels of some of their biggest and best trades. And that NVIDIA trade by Moist is one that really stood with me for a long while, right? And based on your experience, there are moments in your career when there are multiple things aligning, and your job as a discretionary trader is to be able to pull all these pieces of the puzzle together and identify true uniqueness. And that comes from understanding all these variables, and it comes from time in the market. And I think also it comes from understanding market structure. And in this example, as I was saying, the reason why this trade was so powerful is because those daily charts, those daily positions were ripe for some kind of squeeze event. Those short bases were ripe for a squeeze event. So the big lesson for me was, if I am going to structure things overnight, think more about the daily structure, the context, and this concept of uniqueness. And in those scenarios, I think you are able to push that sizing a little bit more and feel comfortable pushing sizing a bit more, because ultimately we're in this seat to try to capitalize on those moments. And if we're not going outside our comfort zone in those moments, then what are we doing? And that was one of the big lessons there. I did hedge with a simple market ETF, and that was great. I think that worked well. So I think in terms of my structuring of the trade, it was fine. But again, that sizing could have been pushed, I think, comfortably 2 times what I did, because the underlying stocks were so liquid, and because my timing in Australia was the forefront of global markets. It was sort of Australia, Asia, Europe, US, back into Australia. We're the first market to be able to capitalize and see this. So that's what I could have done better. And I think one other thing I could have done better is have the ability to have some kind of US ADR access, and that way I could have de-risked. So say, for instance, I'd bought some BHP in Australia, and then say this move continues through the world, and then in America it gaps up, say 2-3%. I have the opportunity now to de-risk some of my position. Or if it hadn't worked, right, and the market sold the event, again, in America, having access to BHP or some of your resources ETFs, I might have been able to short some to help offset the pain I would have taken in Australia the next day. So that ADR access is something that I now have access to, but I haven't used it yet. And again, we talked about getting US access or building a US playbook. And I think access to some of those ETFs, resources ETFs, would be really meaningful for me for these unique scenarios.
Okay. Yeah. Thank you. And I mean, to your point, you'll hear people sometimes say, when those opportunities present themselves, you have to swing the bat and swing the bat hard. And so I think that's, one of the ways I've heard described sort of this idea of taking the opportunity and really trying to capitalize on it. And so,
yeah, I mean, it sounds easy. And there's a lot of hindsight, and it is probably one of my biggest weaknesses. That I'm not great with sizing. I'm sure we'll talk about this later. I continue to sort of sell myself a bit short here. I think the traders I speak to and work with, they're very good risk takers, and I'm not a bad risk taker. I'm just haven't formed the reps of really getting a bit out of my comfort zone. And so I think, again, the write-ups is trying to real-time ask yourself, is this unique? Like, can I push this a bit more exponentially? And unless you start rewiring those sort of, those brain patterns, that self-talk, you're never going to be able to do it. So that's the starting point. It's recognizing that I need to improve here. And the self-talk is, can this be sized better? Am I pushing myself? What's the right number here? So it's definitely something that I need to work on and consciously.
And yet that's part of the beauty and also the complexities of trading, isn't it? And I mean, that's kind of one of the topics I wanted to touch on, is about the complexities of trading, because you did extremely well, by most people, a lot of people's, accounts in this trade. And so still there's a lot that you can take away from it. And so, there might be a lot of people looking at this trade review and saying, Austin, you nailed it by many accounts in this trade. You've been trading professionally for over a decade. You've got your own office, you've got a family, you're happy, you've made it in trading. What would you say to them? Would you agree with that? How would you approach a comment like that?
I'm so happy you asked that question, because do I think I've made it? Not at all, And I've always been quite hesitant to do podcasts because of, I feel like a bit of an imposter. There are a lot of traders out there who go on these shows who are genuinely elite level and who've genuinely made enough money to be able to retire. And that's just not the case with me. And if I'm being honest, I kind of know that I'm not a particularly talented trader. I know that I probably, this doesn't come naturally to me. But what I also know is I work really hard. And what I also know is that I'm a pretty good self-coach. So yeah, and answer your question, have I made it? Not at all. There's still so much I want to achieve and do. Rewind 3 to 6 months ago, and I was actually, really quite stressed, and was one of the trickiest times in my career. So, this journey is not exponential. It's probably not even linear. There's going to be these constant highs and these constant lows. And I'm only 41, so I still have a lot of time left in this game. So yeah, I hope that answers that question.
Yeah, I mean, absolutely. And
Yeah.
I think it's important for people to hear your perspective on that, and a total personal side note, I really am honored that you did come on and we're having this conversation, because,
Yeah.
You and me both can sit here and say we haven't made it. I feel like myself too.
Well,
Even further
what I
degree.
wanted to do is I actually wanted to flip it, right? Because I wanted to come on because I actually wanted to show about how hard this is. I wanted to show about all the tough spots that you're going to go through in trading. And there's a highlight reel, and you can read people's content, and I'm guilty of it, and you can see the highs. But the reality is that it's really hard. And that was the message that I kind of wanted to sort of give today. And that's why I wanted to come on the show. It's actually the flip of like, you've made it. And it's why I started writing my Substack, also to try and talk more about some of the experiences, the highs and the lows, and the things that I'm working on, the things I'm trying to learn. Like Dickie Bush is a social media sort of writer, and someone who I've been following a lot, and I like his content. And I don't know the exact quote, but I think he wrote like, I used to write to show off what I know, and now I write to work out what I don't. And I kind of feel the same. I'm here pouring out all the lessons to try and work it out, because there's still a long way to go,
Absolutely. And your Substack is one that I highly recommend, because you do go into a lot of detail and depth, and you have various topics that you discuss about trading, and just seeing how complex it is, and further, what it takes to be at a professional level in trading. So for everybody listening and watching, I highly recommend going and checking out Bay Trading, Austin's
Thanks,
Substack.
man.
There's just a ton there to soak up and to really think about, and how it can apply to people's trading. And so related to that, Austin, what have been, in your view, some of the more difficult components of trading, adversities that you've gone through? We've talked about a few of them, but, from your perspective, what are some things that, you think is worth mentioning that people should know about your trading journey and just how difficult it can be.
Yeah, thanks for the recommendation on the Substack. It's something new to me. It's something I've been experimenting with, and something I've been really enjoying. So thank you for that, and I hope people can read and get something from it. Now, in terms of my own adversities, I know that my biggest struggles remain this concept of overtrading, this concept of making mistakes. I think for a lot of people, there's a pathway where, do you have edge? And if you don't have edge, that's where your problems are coming from. You don't actually have edge. And for those guys who've been in the market for a long time who have edge, your problems are going to probably be more on the sort of psychological side. And most of my current problems are on that part of the camp. I'm continue to have problem patterns which rear their head, and that's specifically what I'm focusing on. Trying to address those better so that I can make space for the real good stuff, make space for these unique trades. I think my character trait is that because I'm competitive, because I'm quite social, I tend to overtrade. I tend to get into stocks that are moving that I haven't planned for. I'm at my best when I'm planned. I know exactly what I'm doing. There's an element of automation behind everything I'm doing, and I feel in this like comfort zone and this sweet spot. My worst traits are those planned trades, nothing's happening, and then suddenly things start moving, and suddenly I find myself straying from that playbook, joining stocks in the wrong spot, and overtrading. So those are the things I've been working on quite hard via my report cards, like identifying the specific triggers for why I'm doing what I'm doing, and then real time being able to say, hey, like that's that feeling again, Austin. You're about to join the stock in completely the wrong spot, and you're about to join the stock based off something that you don't have necessarily an edge in, or you don't have a playbook for. And I don't think those emotions are ever going to go away, but I do think through practice and reps, you're better able to identify them, and the losses that you may take from those trades will be smaller. And obviously the sweet spot is to not be able to take those trades at all. So that's one area I'm trying to work on, is overtrading. The other habit pattern, destructive habit pattern I have, is I'm good at taking stops, but I invariably only take off half my position, and it doesn't make any sense. And that other half of the position, the stats show, it always goes on to be a much bigger loss. And in my head, maybe I'm thinking there's not enough liquidity, so I'll just do half and I'll do the other half soon. I think more realistically, the reason why I'm only taking off half is because I haven't fully accepted I can be wrong. And I think, again, that flows into my competitive nature, where it's like, I like to win, and then hitting this thing out in full is like accepting that I've lost. And that doesn't make any sense in trading. I think a lot of the patterns that you formed in your past life served you really well for certain scenarios that may not serve you very well for trading. So you have to deal with all those and how that's interrupting your trading. So in full answer to your question, overtrading is a big problem that I've been working on, and taking stops in full. I think when I'm good, I'm really good, and when I'm planned, I'm really, I trade really well. But it's all this space in between that is causing me so much anguish that I need to deal with if I'm really going to grow and really get ahead. And you can't push sizing until you've dealt with these things, And I also think you get away with it in certain markets. You get away with it in certain markets. When markets are good, you can have these problem patterns and you can get away with it. The last 2 years, obviously, in Australia, the market has changed. We've gone from bull market to the complete opposite. Liquidity's come out. There's pockets of strength, but not sustained. So these bad habits are just constantly getting found out.
And how do you go about change? Whether it's over trading or how you stop out of a position. What's that process look like for you when you identify something that you want to change, and
Yep.
then you have to actually implement and execute the change? Because for a lot of
Yep.
people, I'm sure they could relate to that and just how difficult it is. One of the
Yep.
things that I think a lot of traders at all different levels have in common is that they
Yep.
end up doing so much of the similar or same exact things and habits that
Yep.
they want to break. So how do
Yep.
you go about making those changes, Austin?
Yep. There's a few layers to that. I think the first part is just got to be full awareness. You know, full awareness at the end of the day, or in that moment of what have I done wrong here? At the end of the day, it's not fun going over your crap trades. It's not a fun process. It's not fun to highlight all your flaws. But that's exactly what you need to do. And I think a lot of people, certain people I've spoken to, they don't like that process. At the end of the day, they're like, get me out of here. I'm going to go to the gym. I'm going to reset. That's not a bad thing, but you haven't addressed the problem. So awareness is the starting point. And for me, writing obviously helps me address that. I write a report card. I would say I was, 4 or 5 days a week, I'd be writing my report card. Since having kids, I would say that's changed maybe 2 or 3 times a week. And I'll be honest with that. But nonetheless, I'm still writing about the good, writing about the bad. So awareness is the first part. Then the second part is obviously trying to create solutions that work for the next time. All right. And you can only do that by going through that reflection process and then building systems and solutions to actually really target that particular thing. So for instance, in my report card, currently I'm working on, say, trying to rectify my most obvious mistakes. I've just built a very simple mistakes tracker. So it's like, what are the 3 or 4 things that most encapsulate my mistakes? And I just have a very simple checklist in the day. Did I do that? Did I do that? Did I do that? And the more and more reps you're getting, the more and more you're forming, the neural pathways in your brain that show you that's the problem pattern. And the more times you stop doing it, the more it actually, you're now sustaining change. I love reading like different trading related books, but recently I've got really involved in sort of, Brett Steenbarger's old works. And his work's just fantastic. And the more and more of his work I read, the more I'm sort of working on these like psychological type problem patterns, that then when I'm going to my trading the next day, it's actually becoming automatic, if that makes sense.
Yeah, absolutely. And those are great points and great actionable steps that traders can be thinking about to implement change.
Yeah. Sorry, one thing I did want to say there is I think that you don't want to try and do too much. All right. I think setting one goal is really the only way you're going to sustain change. 1 or 2 points. I think people try to do too much. I think people say, I need to size better. I need to be more selective in my trading. I need to do this. It's just not going to happen. You can't cover all these things off. So awareness, and then writing, reflecting about it, and then being very specific with one goal. All right. So I'm specifically targeting my mistakes with morning drives, getting the reps in there every day, coming back and assessing myself and how did I go. And then after, say, a month, I can go, boom, tick that one. Now I can move on to stops and full, whatever it is. So I think that's really important. Not trying to do too much. Understand there's areas in your game that you're just going to have to improve on. But focus on that one thing in the same way that any other sports professions, would do the same thing. They're just going to focus on set pieces, or they're just going to focus on their first serve, whatever it is, until they've absolutely nailed that. Then you move on to the next.
Okay, thank you. Because that was going to be my next question, which is, how many things at one time and how often should people think about trading or changing up what they're working on? So one thing at a time.
There's no right answer here. Yeah, there's no right answer here, but one thing at a time. build solutions that work for you, and then you have to have this period of assessment of, are you actually executing on these different steps to hit that goal? And once you are, then you can move on. And it's hard because, there's a lot of different components that go into trading. And on any one day, one area, there might be a shortcoming. And so your instant reaction is, oh man, like I should have sized that better. I need to focus now back on sizing again. But no, like you actually have to be consistent on one area, get that down before you can move on to the next. And I certainly am not religious enough about this. I have periods where I'm not directly following exactly what I'm talking about here. And guess what? The results show. It's funny. It's like ironic. It's like when you're trading well, you're doing all the right things. So then you get complacent. So you stop doing those same things that served you so well. And then suddenly enough, you start losing again. So you start doing all those same things. It's this constant feedback loop. But that's my generic advice.
And I think that's helpful advice. While we're on the topic, Austin, of the complexities of trading, one of the things that you had brought up is being a parent. And so I wanted to talk a little bit about the complex nature of a routine, and maybe a routine that you had, for example, when you're working at a prop firm and you're trading, on a desk, and that might be different from how you're trading now,
Yep.
and adding children and, a family to the mix. So could you talk a little bit about, the complexities that change over time with your routine, and how you've been able to work on those and adjust your life to fit, trading and balancing all these other things?
Yeah, sure. I mean, just to be clear that I still do work for a prop firm. But since COVID, what's happened is we're all working privately now. There's no one central office. Blue Lake was a sort of a private hedge fund type environment. And the current prop firm I'm working in, we're all sort of individual sort of traders, as it were, in our own sort of private setups. And in my private setup here, I work with two colleagues who are also independent traders who are doing their thing. But we've sort of built a great team environment that's sort of fulfilling that sort of structured environment. But yeah, and answer your question, it changes with time with kids. My kids are now 2 and 4, and as you'll know, there's periods where it's really, really hard, and then there's periods when it's a lot easier. I'm very lucky that I have a wife who is full-time looking after the kids, so that does enable me to be able to get some kind of consistency and routine and focus on what I need to do. I found the first 3 to 6 months very challenging. Like I think most parents will say, I think a lot of my routines fell out the window there. I wasn't going to the gym like I wanted to. I wasn't writing the reviews like I wanted to. And for me personally, all these different things need to click for me to be able to trade well. I need to be mentally fit. I need to be sleeping well. I need to be physically fit. So there's no right answer. All I'll say is it just does get easier in time. But, you've got to treat trading like any other professional domain. So if you need help, you got to get help. If the kids aren't sleeping, what can you do? Like, there's going to be periods where that's it. Like, you're not sleeping that night. And so the next day, ask yourself, am I fit to trade today? The amount of money I ripped up in those first 3 to 6 months having kids because I was sleep deprived, it was just a fact. So you've got to be conscious about, like, what am I missing here? And just to really be self-aware in those particular moments. But now I'm lucky. My kids are healthy. We're in a good place. But yeah, certainly I want to be a present father. So when I'm getting home, I'm spending time with them. I'm putting them to bed. I'm doing everything I want to do. I'm with them in the mornings. So with my time, I'm being a lot more ruthless. With my prep time in the mornings, I'm just prepping. I'm not wasting any time, talking to, on chat rooms and like that. And it may seem selfish, but it's just what I've got to do. And at the end of the day, my review work, boom, I've just got to do it. And sometimes if I can't get it done and I've got to get home, then I do it when the kids are asleep. And that's probably maybe impacted maybe some time with my wife, which has been hard. And that's an area that I probably need to improve on. But again, there's no right answer.
It definitely sounds like you're more aware of being efficient with the introduction of kids and balancing that out.
Yeah.
Would you say your risk has changed at all? When you're thinking about,
Yes.
longevity and college funds and all of those sorts of things, has your risk changed over time?
Yes. It's funny that you mentioned that, and I'm probably not consciously aware of it enough. And when I mentioned earlier that I need to get better at sizing, I think this is part of it. I think, I wouldn't say I'm scared of putting on risk, but certainly there's this element of, man, I've got all these responsibilities now. I've got, one income family. I've got 2 kids. I've got the house. I've got all these things. And in the moment, I'm not thinking about those things. But maybe consciously somewhere within me, unconsciously I should say within me, it's stopping me from really putting on more size like I was prior. But I think it's just a temporary thing. I think once I've come through this period and the kids get a bit older, and once I've found more consistency with my trading, because I'd say the last 3 to 6 months haven't been as consistent as I want, that sizing risk component will come back. I think it's a goal that I want to work on. But yeah, certainly I've definitely reduced a lot of the things that I used to be doing. And I'm okay with that at the moment. But it's something I do need to push. And in terms of time, you just really need to identify the biggest levers. What are the biggest levers for you? And just execute those. And being ruthless to it. Just being ruthless to it. So my physical morning routine is really important. My morning prep's probably probably up there with the most important bit of the day. Recently, I've been getting a lot into sort of visualization work with my morning prep. So I've been working hard in that area. And then obviously trading is the big block of time. And then my review work. So those are the sort of the non-negotiables that I've tried to block, structure, and it's selfishly just my time.
Yeah, thank you so much. I really appreciate that. It's a very transparent and I think real answer to the question. And I think every parent that I've spoken to who's also a trader, active parents have said very similar things about being more aware of risk, being more aware of how much time they're spending in front of the screens and how judicious they are about, the hour that they might have just spent not so focused before kids arrived, and they're much more, laser focused to get the time right so that they can.
It's a cringy thing to say, but I've been thinking this a lot, but you have kids for a reason, because you want to have kids. You want to play with your kids. So often I get in the door and my phone's popping up because something's happened. There's breaking news, and I've just got to tell myself, man, it can wait. This is my moment. With my kids, I only get this 1 hour every day before I put them to bed. That's my job. I've just got to be present in that moment. There's nothing ever for someone like me that should stop that 1 hour. And you'd be amazed at how hard it is for people just to put their phone down for an hour. People can't do it, and I'm guilty of it as well. But it's the concept of just being present and enjoying those moments at this age is just so important, and that's something that I'm really mindful of just trying to be present with them in that moment.
Thank you so much again, Austin. I really appreciate that conversation, and I feel like we're going to have to do another version, an updated Trader Dads discussion, because there's just so much there, I think,
Yeah.
to still discuss. But I wanted to talk a little bit real quick about trading psychology, because, there's a tweet from a while back. It's years now, but it's one that I remember being really conscious of. Oh, this Austin had said this about sort of mindset, and I wanted to read it if that's okay, and then just quickly,
Please. I can't promise I remember it, but yeah, please.
Yeah, yeah. So the post was, trading is such a mental game. Took a prolonged break as I was churning and spiraling. I lost clarity in a market that was filled with simple opportunities. Came back and the same ops have come about, and I'm now executing better. Nothing changed other than the mind you bring to the game. And I believe this was around 2019 or so. So it's been a few years. I just wanted to talk a little bit about psychology, mindset, and how you think about it now, and how important it's been over the years for you.
Yeah. I can't remember that specific moment in terms of what trades were happening and the like, but yeah, it goes back to a point I was saying early on that when you're in a developing learning type phase, your problem is most likely edge, like you don't actually have decent edge. And then as you spend more time in the market, any problems that may arise are most likely going to be psychological. And again, I think for me personally, I am not naturally gifted at trading. I think there's so many things I've had to work really hard on to try and get there. And so these demons are constantly sort of rearing their head. And something I read recently, which I think is quite interesting in this moment, is Brett Steenbarger talks about this psychodynamic model. So what that means is there's some kind of experience in your previous life where you built patterns that served you very well in that time in your life. And those same patterns are probably hindering you now in trading. And for me, I think, I was at boarding school from age 10, and I loved it. It served me really well. I had a great time there. But lots of patterns that I built in that moment probably are not serving me well in trading. I was probably a bit insecure, which led to me, being a bit of Jack the Lad. I played every sport under the sun to try and fit in. My parents weren't, well-to-do, and I was with lots of rich families with big names. So I had this sort of sense of inferiority, which led to me trying all these things, trying to get a name for myself by playing all these sports, and it worked. And that seems to keep playing out in trading, whereby it's like if a stock moves and I'm not in it, I feel inferior. I feel like I should be in this. I should be the one who's front foot on this thing. So why am I not? So bang, in I go. And that's where it's not an edge, because I'm just trading something that's just random. It's a psychological thing where I'm not able to focus on my playbook. So yeah, in terms of what I'm doing, I'm consciously always riding to try and keep me like more even keeled. You're going to have these highs and the lows, and the goal is to try and like constantly even it out through riding. Sometimes things spiral. There'll be days when you're not conscious enough, and that becomes weeks, and then you're forced to recognize that, and often the best thing to do is just to stop. Sometimes the market is just not working, and that's what it is. But you have to ask yourself, is the market not working, or am I just literally not executing? And that particular tweet probably was the latter. It was just, I'm literally not executing anything correctly. I'm literally now forcing things. I'm literally just trying to make money. And without breaks, without self-reflection, and without more mindfulness, things can get really bad. And I have never had these big blowout losses, but I've had sustained drawdowns. And to get out of sustained drawdowns requires like conscious application, and it requires going back to basics, and it's not fun. It's really unsexy. But that's what it takes. It's just going back to basics.
Okay, thank you so much. I really, really appreciate the transparency and openness there. That's, I think, something that traders could learn a lot from, and looking within and trying to understand.
Yeah, everyone's going to have their own. Everyone's going to have their own things, you know, and that's what makes trading so fascinating. You got to go deep on yourself at times, you know, and find out what your own proper patterns are or what your strengths are.
Yeah, absolutely. Absolutely. And Austin, I wanted to talk a little bit about, networking, and, could you talk a little bit about how you found sort of your trading pod or your, mentors over the years? Could you talk a little bit about the role that other traders have played, positively in your trading career so far?
Yep. Yeah, I would say that building a network is probably up there with the most important thing a trader needs. Like, to be professional, you need a professional infrastructure, and a lot of that is going to come from the team environment you're around, or the team you build around you, I should say. And through my career, my mentors and teachers have kind of changed. But when I was working at Blue Lake, I think the first person, as I mentioned, who made a big impression on me was Bryce Edwards, an Australian trader, and that was because of his excellence with tape reading, and that really rubbed off on me, and we became good mates, and that mateship then led to sort of like a relationship. We were both trying to help each other out, so we were both growing as a consequence. I was also sitting next to probably the best trader in Australia called James Chen. And what I learned from him was systemizing all your playbooks, was getting stats on your playbooks, was being professional in everything you're doing, trying to be less discretionary and more professional. And that's going to cost money to build, time spent on working on these different tech hacks and improvements. So those were sort of two of the most sort of early formative influences for me. And then as I was becoming a little more successful, I reached out to Mike Bella, we talked about, and I said, Mike, like, I'm this is who I am. You're someone I greatly respect. I want you as a coach. Like, what can I do? How can I work with you? And he formed a sort of report card type service with me, where I would send in my report card, and together he would just coach me through various different goals that I needed to work on. And through that, he then also introduced me to Lance Brightstein, who I'm sure most listeners know a lot about. And that was just like the most fortunate thing that has ever happened to me in my life. We were both not S&B traders, so I think there was only a few of us Mike was taking on, because he's obviously very busy with S&B. So he just basically put us into an email chain, and we would collaborate. And I used to get to wake up and see Lance's trading and all the stuff he was working on, and every day my mind would explode. And then I would think more and more about stuff that I needed to bolt on to my own process. And even though they were completely different markets and completely different trades, it was all about sort of self-improvement and how can I be more professional in everything I'm doing. And he's gone on to be, both of them have become really personal, great friends. I don't work with them anymore. Mike is busy with S&B, and Lance obviously is now not trading and a full-time consultant. But yeah, that was a really formative part of my life. And now I'm based down in beautiful Cronulla. I work in an office with two younger developing traders, and I would say we've built this great teamwork environment, team environment, where we're collaborating, sharing things. And that's a new phase in my life, which I'm really enjoying. And I think, again, there's this element of, collective mentoring, collective self-improvement in the office. So everyone's rising together.
Thank you so much. I love that you bring up the idea of having a professional infrastructure and using that sort of metaphor to think about the network that we have, with other great traders, developing traders, and constantly learning from them. And we're filming this just a week or so after Traders for a Cause, and that's one of the topics sort of, that continued is, meeting other traders, learning from them. Lance was there and discussed that as well. So I think it's really important for people to realize, just how difficult it is to trade, even when you have these professional, other networks that you can turn to and learn from. So you're better off in the long run. If you want to do this, it's probably best to start thinking about a network.
Yeah, and it's not just so much, necessarily the trade ideas you may get or the infrastructure that you're sharing. It's you're building these long-lasting friendships. You're making this journey like more fun and enjoyable. Otherwise, what are we doing? It's a bit of a big picture romantic thing, but like working with people and sharing these highs and sharing the lows is just a lot more rewarding experience. Like trading is quite insular. It can beat you up, and this having a good, friendship around you, is the one thing you can do to sort of alleviate some of these stresses and to share the experience.
Yeah, absolutely. There's a lot of highs to celebrate in trading. There's a lot of lows that are inevitable.
Not enough
in
recently.
Trading. Yeah.
Yeah.
And Austin, if it's okay with you, I'd love to go through sort of like a lightning round set of questions, pretty quick questions and pretty quick answers. Is that okay?
Yeah, please. Yeah, it'd be great.
And the first question I have is, what would you consider to be your greatest strength or attribute as a trader?
I think I'm a good self-coach. I think I'm a pretty good self-coach, which I think you're going to need as a discretionary trader. And I think one of my strengths is pattern recognition. Like I'm strong there, and it's something that resonates with me.
What's the best piece of trading advice you've ever received or been given?
That's a great one. Pretty much most thing Lance has ever said to me are all up there, but simple things like the trend is your friend is just the most generic statement you could say, but it's probably the most true. If you can structure trades within your playbook to follow trends, that's where the easy money is, and that's where the highest reward is. I think the other great piece of advice is the best trades go from the start. You'll see the trades working straight away. That's the sweet spot where you want to be spending your time and energy. If you're sitting around idle and something's not working, just cut and just move on.
Are there any misperceptions or even myths that you believe exist about trading?
Yeah, I think one of the biggest myths is one, this is easy, and two, that you can just plug in at home, trade charts, and make a lot of money. It's just not going to go well like that. There's such a high level of infrastructure, time, and reps that are needed in trading to be consistent and be successful. So you need to think about how can you professionalize everything you're doing. And I think people underestimate the time and sacrifices that are going to be needed. I think because ultimately it's quite an unstructured environment. The market closes at X time and opens at X time, and that's pretty much the only structure. This leads to a lot of people wasting time and a lot of people cutting corners where the market's closed, they go home and they just think, I'll start again tomorrow. No, those are the times where you've got to be putting in the work. So yeah, I think that's some of the biggest misconceptions.
What has been the most memorable moment of your trading career so far?
The 2020 markets were, the whole year was memorable. There was some crazy fun stuff there, and sharing those experiences at Blue Lake with James was a lot of fun and very memorable. I think more specifically in the last couple of years, working in my new environment with my colleague Hayden, sharing some moments, invariably breaking news type events. They're always very memorable. We had a great breaking news trade in coal stocks. We had a couple of breaking news trade in takeover type candidates. And a lot of these are trades that we'd planned ahead of time. With breaking news, you can't plan a lot of them, but particularly with the coal trade, we could. And that was a nice moment, just doing the planning, executing real time, seeing his success with that trade, and at the end of the day, just sort of a little pat on the back. That was nice.
Are there any specific technical indicators that you tend to use on your chart, either to help you think about an entry point or an exit?
Yeah, takeoff indicators. Takeoff indicators. I think people massively complicate things. I think price action is the truth. In fact, when you ask about some lessons that people have told me that are really important, price action is the truth is probably up there with the most important. I have VWAP not because I think it means anything, but because other people are using it. But if you can spend more time watching the tape and more time watching price action, weight that way more heavily to any other indicator.
What advice would you give to a struggling trader?
Have you spent time analyzing the trades where you're losing money? Is there one particular trade that isn't working for you? Or are you making sort of mistakes based off like your own inner psychology? Only if you've done that hard work on yourself and your trading can you assess, should I continue trading? This isn't for everyone. If you're not doing that work on your worst trades, then you're not learning anything. So that's what I would say. So the uncomfortable work is the work that you got to do, and from that you can move forward. But if you're not doing that uncomfortable work, you're never going to get out of this struggle.
Is there anything that you do outside of trading, away from the desk, that you believe has a real important impact on you as a trader when you get back to the desk?
Yeah, I think for me, it's the physical aspect. So I'm a bit of a CrossFit junkie, so I need that in the mornings to sort of fulfill, my energy and to get my energy levels good. I like pushing myself in the gym. I think it's a nice analogy for trading. I swim a lot. I'm lucky to be based down by the ocean, so I have access to the ocean. And yeah, riding. I think riding is the biggest outlet. I think more people should be riding. Not everyone likes riding, but it's a great way to reset from trading, to formulate things, and to steer you forwards.
Absolutely. And last question, Austin, for those listening or watching who would love to learn more about you, how you trade, or maybe even contact you, how can they do so?
Yeah, I run my own Substack. You'll see that on my Twitter profile, Bay Trading, which is named after the Cronulla Bay that I look over when I'm trading, which is nice. I try and share trade reviews. I try and share particular trading messages that I may be experiencing in the market. So yeah, check me out there.
Austin, thank you so much for taking the time to come on the show and record this episode with me. I've been a fan of your work for a long time now, so it's been an absolute honor for me and a pleasure. So thank you so much.
Mate, you're very kind. I appreciate it. Thank you so much.
We hope you enjoyed this episode of The Trader's Journey. We have additional episodes we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming episodes the moment they're published. Thanks for tuning in.